Hey guys, how's it going? It's Andy from Magoo Investing. Welcome back. In today's episode of Robinhood Top Stocks, we're going to be starting out the week fast and talking about a stock that has earnings at the close of the market today. And normally I don't really like talking about companies very close to earnings because volatility goes up a lot. But from what I've seen on the charts and kind of what I've seen with the company overall, I think it's really interesting to see where the stock goes. So in this episode of Robinhood Top Stocks, we're going to be talking about SFIX, ticker symbol SFIX. And so this is kind of a company that's flown under the radar a lot, especially when you talk about the volume. When I was looking just kind of overall at the company, I was kind of surprised how low the volume is on a daily basis, trading about 1 million shares per day. Something like Twitter that I trade on a regular basis is trading around 30 million per day. And so that's kind of a warning that I'm going to start out this video with. When you're trading a company that has very low volume, sometimes it's not as easy to get in and out of trades just where you want to be. When there's not as many shares being moved constantly, it's harder for your positions to get filled immediately, and you might get your orders filled at a not ideal price. And so for people that don't know, I'm going to kind of give a breakdown of what SFIX is. This is a company that I had no idea about until I downloaded Acorns, I think it was last summer. And it was kind of going through the found money section, looking for companies where they give cash back or just flat up cash for using their products. And so SFIX was one of those ones that I looked at it, I kind of got halfway through it and decided not to actually use it. Basically what it is you go onto the app or the website, you fill out a survey that kind of talks about the styles of clothing that you like to wear, where you wear them, if you're wearing casual stuff to work, if you have to wear a suit to work, and it kind of figures out what kind of clothing you need in the future. And then you pay a $20 fee, which is kind of a consultation fee or a personal stylist fee. And someone will go through your results, kind of figure out what you're in the need for, what you need right now, and it'll kind of pick out a box of items that you will most likely be wanting. And so they send it to you, you look through the box, you try stuff on, and if you don't like it, you send it back for no fee. And you keep whatever you want, and you get charged for that. So it's a very simple thing, not subscription based, which I thought was very interesting. So when I hear non-subscription based, it makes me think that they have to do a really good job at keeping their existing customers. And by doing that, you have to have great transactions and not piss people off. And overall, they have clothing for pretty much anyone. They have maternity, they have stuff for men, women, children, and pretty much anyone in between. So they've got stuff for pretty much everyone. It's not something that I'm really in the market for, even though I kind of think I'm the target demographic, some guy that has like 10 different shirts and like 4 hoodies that he wears all the time. Maybe when I start working after college, it'll be something I'll look into, but it's kind of funny making this video and thinking, man, who are they targeting? And it's me. I am the target demographic. And now with that long-winded explanation out of the way of what the company is, let's talk about the stock, the whole reason everyone's here. And so this is a stock that IPO'd at the end of 2017 at around $17. And after it did that, it pushed up to its highs of $52 pretty quick within a year. And so in August of 2018, the stock was sitting at $52 and it had been just moving along. And as the market fell, kind of like how we talked about Activision in yesterday's video, where if you missed that, I'll throw that up there. Activision and SFIX got hit heavily by just kind of the market falling at the end of last year. And so it fell from its all-time highs, it fell almost 70%, and then it's kind of steadily pushed up since then. And when you see the 70% from its all-time highs, it looks pretty bad. But then when you see that it's up 40% year to date, that's kind of interesting. And so in this video, I'm going to be breaking down what short or long-term potential trades I see with SFIX, ticker symbol SFIX, and just kind of break down the charts because I think there's a lot of potential trades depending on which way the earnings go. The earnings report from today will be really interesting to see what the trajectory of the company is looking like. For the first time since it's been a publicly traded company, they're projecting a loss for earnings. So they're projecting to lose around 7 cents per share, which is the first time they've gone negative. And hearing that, it's kind of like, ooh, the alarm bells going off, but I don't think so. From all the research I've done, it appears like SFIX is putting an emphasis on expanding their markets. I've seen that they've gone to UK recently, and I think they're trying to expand even further than that. And so I think that them spending money to try to get a larger market share, I think is very important. When you talk about competitors, the only one that I really found was that Walmart has a box, kind of similar to it, but at a lesser price. And while Walmart is a giant like that, I don't think that they're kind of competing for customers. I think SFIX is more of the younger generation, maybe the 20 to 35-year-old, and I don't really see Walmart being super attractive for that, and based off of what I saw on their website, did not look like that great of a product. Also, I just thought it was an interesting fact that since their IPO in late 2017, they have beat expectations on earnings every time, and I'm very curious to see what happens after the bell today. Before we go and talk about the stock overall, I gotta say that I'm not a licensed financial advisor, so I'd highly recommend talking to a professional. Someone can find you the best places to put your money going forward. And with that disclaimer out of the way, let's go hop on to TD Ameritrade and talk about Stitch Fix, ticker symbol SFIX. All right, so here we are today looking at Stitch Fix, ticker symbol SFIX. We're going to start on Robinhood as always. They have it as a 54% buy rating with 20,000, almost even, owning the stock on Robinhood. Currently trading just shy of $24. And so as you come down here, this is the low average volume I was talking about of around 1 million. They don't have a dividend, which is just something to take into account. Buy, hold, zero sell, and they have not missed earnings ever, which is pretty interesting. I bought 5 shares of it in August of last year, pretty close to its all-time high. I'm pretty sure this is right after, or right before maybe, it fell. So it's just kind of funny to look back on those previous trades. And now as we come back here, you can see the entirety of the stock, as this is November of 2017 when it originally IPO'd. So the all-time low is 1450, which it never hit after it fell to its recent lows. But as you can see, the stock pushed up, fell, went horizontal, and then pushed incredibly fast up to its all-time high of 52.44. And then as the market fell at the end of last year, it kind of went with it and just got dragged down. And so since then, it's pushed back up, gotten rejected, has not filled this gap, which I always think is very interesting, and then has been pushed down. And now we have kind of an interesting situation. Let's go to a shorter time frame with the 4-hour 180-day chart, my favorite one to look at. And I have this as a decent support, or decent resistance. It's been a support in the past. It's tried to break through here recently. It's been respected as a support over here, and it just seems to be struggling to get through this zone right here. And what's a great way to get through a very nice resistance? Earnings, of course. And when we have earnings tomorrow, or at the end of the market hours today, I'm recording this on Sunday, I think that might be the catalyst that needs to push through here. And so I would never take a position right before earnings when it's sitting at a resistance like this, but I'm going to be waiting to see what the market thinks about the earnings overall. And if it can push it through this resistance right here, have it come back, retest the zone, and push up, man, it's looking pretty attractive overall. It's up 40% year to date, even though when you go back to the longer time frame, you can see how far it's fallen from its highs. But I kind of like this horizontal pattern that it's got going. And if you can just get that little push to get above the resistance it's at right now, I think it's very attractive for kind of a medium-term swing trade. I'd be looking to hold this maybe until June of next year, or maybe just until next earnings and have it be like a 3-month trade type of deal. Another thing you got to point out is the golden cross is starting to get pretty close. We had this recent death cross over here that got changed pretty quick, and now we're starting to get pretty close to the 50, crossing over the 200 and having it be a bullish indicator. Not a deal breaker, or not the sole reason why I would ever take a trade, but it's just kind of something where if it can push through this resistance and the bullish indicator of a golden cross comes, it looks pretty good overall. I love talking about stocks that are undervalued, and if it can push above this, I would say that Stitch Fix is pretty undervalued overall. Now let's see what the professionals think overall. Here we are on CNN. As you can see, it's up almost 41% year to date, but it's still pretty low on its 52-week range. That's an incredible range. And when I see that something's up a lot so far this year and still has ways to go, oh man, that looks good to me. So as we come down here, they have earnings growth. They had it down 21% last year, and then down 90% this year. But revenue or earnings growth in the next 5 years have it being up 56%. Next reporting date, I'm pretty sure this is the 9th is the reporting date. Anyway, we're looking at the forecast. That's what we're here for. Where they have the median up 16%, the low at $16, and the high at $38. So it's a pretty wide range, which is pretty expected based off of the crazy 52-week range it has. Now let's go take a look at those levels. The $16 one I think is the interesting one. Based off of the recent track record and this little support right here at around $17, maybe $16.75, I would never let it get down to $16. I'd probably cut losses after that, but I kind of agree with them on that one. It's very possible that it could fall back to that level. And then the upside, they have it as $38. Let's see what they have, where's that is. So that's pretty close to a gap fill. So that would be an incredible year. I'm more looking for maybe the $32 or the $35. 38 looks a little crazy to me, but that's what they see. And now let's look at Yahoo Finance, which is usually all over the place. They have it as up in the short term, medium term, and down in the long term, with a 1 year price estimate of $27.55. So that would still be a decent play. That would get you up to almost this other resistance. Not as strong, but definitely a resistance. And so overall, I think that Stitch Fix has potential, and I'm just waiting to see what the earnings will look like tomorrow, and if that's the catalyst that I can push it towards a very nice year, or if it'll fall back to its recent lows and just kind of go horizontal for a while. So overall, I think that Stitch Fix is a type of company where you need to kind of be patient for a little bit. When this video is coming out, if you're watching on the day it's released, thanks for watching, I would highly recommend waiting until earnings come out. Volatility is a huge thing with earnings, and if you want to be risky and kind of put a bet on which way you think the market's going to push it, you can go for that. For me, something that I'd be waiting for is a couple days after the earnings and see where the stock settles. Currently, as I talked about on the charts, it's sitting at around a pretty nice resistance. And so if it pushes above that, that's great signs for the stock going forward. However, if the stock misses on its earnings for the first time in its history, I'd be looking for it to fall down to the $17 mark before I'd ever consider taking a position in it. I think it's got a lot of upside, but I would need the momentum to start pushing it higher. And while it's sitting at a resistance, you kind of got to wait and be patient. Since its fall to its all-time lows, the moving averages have slowly started to catch up with it. And as I mentioned on the computer, we're getting pretty close to having a golden cross. And as I've talked about every time, a golden cross isn't the only factor that would lead me to taking a trade, but it's just kind of something that maybe would give me a little nudge in the direction of taking a position. So that's something I'll be watching in the future, and I'm really excited to see what happens with earnings. It's interesting that it's the first time the earnings are going to be going negative, most likely, and I'm curious to see what the market thinks of that overall. So let me know what you think about Stitch Fix, ticker symbol SFIX, and let me know what stocks you're watching for the upcoming weeks and for the end of the year. Thanks for watching this episode of Robinhood Top Stocks. I'll see you tomorrow in the next video. Thanks for watching.